Welcome to Cindy Chen REChat. We chat about anything and everything real estate. I am Cindy Chen with Cindy Chen Realty International, and today I would like to chat about 1031 exchange updates under Biden tax reform and share with you some examples to help you understand how that will impact you. First, I would like to share with you about the 1031 exchange updates under Biden tax reform. As part of the American Families Plan, President Biden has proposed capping tax referrals at $500,000 in profits or $1 million for a married couple. The tax revenue generated would be used to pay for a number of important social programs like community college and universal pre-K. And anything over that threshold would be realized in the year that it occurs and taxed at a rate up to 39%. That's equivalent of ordinary income tax rate. That's crazy, enormous amount of money. Now let's discuss about the potential impact of the changes to mass market as a result of this tax reform. First of all, it will lower real estate transaction volume. For those that exceed 500,000 profit cap, it's expected that they would just hold on to their property rather than incur the tax bill. This would lower real estate transaction volume and could impact many of the jobs and industries that depends on it, like title companies, realtors, lenders, and qualified intermediaries. And secondly, about the tax revenue. Implementation of the cap is expected to generate $1.95 billion in tax revenue, which could be used to pay for the costs associated with this bill. However, it should be noted that 1031 exchange already generate $7.8 billion in tax revenue, according to a study from Ernst & Young. So in my opinion, it doesn't really make that much sense to have this tax reform. What do you think? Next, let's take a look at the new capital gain taxation will include. Number 1A, taxation on depreciation recapture at 25%. Number 2B, federal capital gain taxes at 15 or 20%, depends on income. And then number 3C, net investment income taxes at 3.8%. And then finally D, applicable state tax at 0 or 13.3%, depends on which state you live in. That's enormous amount of taxation. Now let's see which capital gain tax rate bracket you belong to. First of all, let's see, taxpayers owe federal capital gain taxes on their economic gain depending upon their taxable income. And a 20% capital gain tax applies to single filers exceeding $441,450 in taxable income in the married couple filing jointly with over $496,000 in taxable income. And the capital gain tax rate of 15% remains for taxpayers below this threshold's income amounts. So which capital gain tax rate you fall into? Next, I would like to explain to you what net investment income tax is, since most people are not familiar with this concept. The Healthcare and Education Reconciliation Act of 2010, it added a 3.8% on net investment income tax, short for NIIT. This 3.8% tax applies to taxpayers with net investment income who exceeded threshold income amounts of $200,000 for single filers and $250,000 for married couples filing jointly. According to IRS Section 1411, it defines net investment income. It includes interest, dividends, capital gains, retirement income, and income from partnerships, as well as other forms of unearned incomes. Hope this helps. Now, before I share some examples with you, let's first discuss, as a commercial real estate investors, what options you have. Option number 1, hold. Wait until market improves. The opportunity cost is high if your real estate holdings are in areas where economic growth and property appreciation is expected to be low. And option 2, sell. Sell the properties and pay taxes owed. The challenge is to obtain the same ROI with after-tax funds versus the ROI on growth equity pre-tax reinvested in investment real estate. Option number 3, 1031 exchange. Defer all capital gain taxes with a fully deferred 1031 exchange or received some boot through a partially deferred exchange. Redeploy equity that would have been used to pay for capital gain taxes into the purchased larger replacement property or properties. Now let's take a look at some examples. So here's the example to demonstrate the difference between selling a commercial real estate property versus exchange it. The scenario is, any investment property in California sold for $1 million net of closing costs with no debt, and its original purchase price is $400,000 with 75% or $300,000 fully depreciated. So how much is the capital gain? It's equal to $1 million sales price minus $100,000 net adjusted cost basis. So the capital gain is $900,000. And the modified adjusted growth income equal to $1.4 million. So for this scenario, let's assuming that it's including income from other sources and the capital gains from the sale. So let's calculate how much capital gain tax you will have to pay. Now let's go through the numbers. Net sales price is $1 million minus $300,000 depreciation recapture at 25%. That's equal to $75,000 minus $600,000 federal capital gain tax at 20% tax rate equal to $120,000 minus $900,000 net investment income tax at 3.8% equal to $34,200. And then again, minus $900,000 state tax at 13.3% equal to $119,700. So the total tax owed is $348,900. And then after tax net equity equal to $1 million minus $348,900 equal to $651,100. That's a big haircut. Based on the previous math, taxable sale after tax net equity is $651,100 versus 1031 exchange gross equity is $1 million. So the replacement property leverage amount, assuming is 75% LTV, then the taxable sales equivalent, the net equity times 4, that's equal to $2.6 million with some change versus 1031 exchange, the gross equity times 4, that's $1 million times 4, that's $4 million. The difference between those two numbers, almost $1.4 million. That's a big difference. Means that you have more capital that you can reinvest it for this property, and going forward, it helps you accumulate wealth much faster and much bigger. So you can see the difference yourself. This is for today. I will share more real estate news and market updates in our future episodes. Thank you again for watching. And if you learned something from our content and like our topic, please make sure to like and subscribe to our YouTube channel. And please connect with us on our website and other social platforms. Stay tuned, and I will see you next time.